Hafa, my name is Ryan, and I'm the president of Pinpoint Guam, and this is Data Points. Welcome, and I'm excited to have you here today because today we're doing, I guess I call it an emergency pod, but not so much an emergency. It's just something exciting is happening in the real estate market, which is a request for proposal has come up from the Department of Defense asking local developers to build 1,400 units by the early 2030s with the first phase due in 2028. So as a function of June 28, right around the corner, I thought it'd be important and insightful to get someone who understands the real estate market. So we're going to bring Sang Suk with MILO Appraisals here, and we're going to talk about the ripple effects of something like that hitting the market and what it does in the long term. You'll be very interested to hear what he has to say. Thank you for tuning in. We have hit 2,800 subscribers, so thank you for that. And we're looking forward to growing. So please do what you do best, like our content and share and tell us what you think and what you want to know about, and we'll be here for you. What's up, Sang? How you doing?
Good. How are you?
You doing well? I asked Sang to come on. This is kind of an emergency podcast or breakout, I guess, because something exciting is happening in the real estate market. Right. So we'll talk about it and then we'll cut it up live to, not cut it up live, but we'll cut it up and send it out and hopefully have a discussion around the RFP. Right. So if you don't know, there's been a request for proposal issued by Department of the Defense, I guess. And what they're asking for is for the Guam market to bring 1,400 units to the market at least to be made available for the incoming surge of military personnel coming from Okinawa and elsewhere in response to all the tension and the China buildup and all the fun stuff, the flight of capital from Taiwan, right? So it's a really interesting thing because we've been having these conversations around housing shortages, and now what I've seen is we've been talking about housing shortages and everyone's just kind of laying by the wayside, right? But now the Department of Defense comes and they say, hey, we have a housing shortage. And I'm seeing a massive mobilization of people, talent, and even some capital, right? In terms of putting an effort together to win this bid. And for a little bit of history and context, about a year ago in March, there was a request for information submitted. And in that request for information, a similar question was asked: how quick and for how much and how can you bring real estate to the market at these same numbers, right? So what I posit is that that RFI, I developed into this RFP through the ether. I hear there is a meeting of some of the people who submitted their proposal, and then they were asked questions, and there was a dialogue, and probably I'm guessing that evolved into what this is now. And this just dropped maybe a month ago, and the short time horizon for this also kind of indicates they already had, kind of an idea about where it was going to go, right? So what do you think that's going to do to the market, Sang?
That's a very broad stroke question.
Well, nuts and bolts.
I in my opinion, there's probably going to be, there might be ripple effects, but Guam's housing market essentially is broken down into, there's the affordable housing segment,
mm-hmm.
and then there's the local population, and then now there's going to be a bigger military population.
Okay.
And all the way across the board, there is a housing shortage, period, for every single segment. Some of the brokers are saying right now that they've been having a harder time finding tenants, but that might just be a cycle thing for this period. You missed out probably on the summer, or not that many people came during the summer, so then it might be harder to find tenants between this period and the next period. So there might be a small window where there's going to be a higher vacancy, but it's a shortage. And what potentially could be problematic is the influx of this construction is only addressing one segment. Okay. It's not addressing the other two. And what could potentially happen is as they go down the road and if they cannot meet the dates for completion, my understanding, the first phase is 2028. We're 3 years out from that. Sometimes it takes 3 years to get permitting done at Guam. So, especially for big projects, right? And I think the initial RFP was saying they were looking for a minimum of 50 units.
Yes.
So those are big chunks, and there's not that many players who can build 50 units at a time.
Yes.
So if there's pressure and they cannot meet those basic requirements that they're giving, 50 units, I think it's about 400 units by 2028, and then another group later on like 2032 or something.
Yes.
And when I was reading the RFP, it sounded like they needed that because they knew that Anderson wouldn't be done.
I see. Is that what you think?
I think it was explicit in the RFP that they couldn't. They're kind of aware that Anderson's not going to be done in time to provide for this immediate influx coming in, which the RFP said, I believe, 17,000 current to 33,000.
Sure.
So that's a 7,000 increase.
Well, yes. One of the things I heard too is they're running out of capacity behind the fence, and then also some of the site work can be pretty pricey.
Yeah,
right.
That's the other thing. I'm sorry, 6,000, right? We're going from 17 to 33.
Oh, okay.
Yeah, so 33, 6,000. But yeah, and that's going to be problematic. If you're looking at big acreage land here in Guam, you have to go through all that process. It's the infrastructure, and there's their power, water, especially is their sewer. And a lot of these larger parcels, they don't have the adequate infrastructure.
Mm-hmm.
So I think they're aware of it. I think the military is aware of it. And the last chamber meeting I was at, they were kind of open to the idea that they will help with the infrastructure, but that wasn't firm. It was very loosely stated. And they were also kind of open to the idea, if it can't be done, they might be looking at smaller projects less than 50. So if that happens, if the demand cannot be met, and then it starts trickling down into a smaller unit groups, then that was going to impact private sector market, right? Now, all of a sudden, these guys who own 16, 20 unit apartments, that stuff might come into play. And then all that does is address the military portion, but then it takes away from the private sector demand and the low-income housing. So that's where it'll start having a trickle-down effect, right? If it's not just new construction and that they start creeping into the existing inventory, then it's going to create more of a shortage on the low income and the affordable housing and the private sector here for the locals.
Right.
So that's going to be potentially a problem if they cannot keep it to new construction only, specific for the military.
Yes.
But, and in the timing, like you're saying, there's a lot of people who are actively pushing for development, and most likely you're going to see a lot of local guys building houses too.
Mm-hmm.
They might have had these lots for a while, and it's like, hey, we might as well start building homes.
Well, you talk about the cascading effect, right? And let's look at the cascading effect over the last several years, right?
Mm-hmm.
Starting from, let's say, 06, right?
Mm-hmm.
So if you say 06, OHA was probably about 1,700, right? I would say during that time, the GURA Section 8 rental, and I'm just speaking out of like pure memory,
right?
For probably a 3-bedroom, was probably like $1,200,
mm-hmm.
right? Similar market unit would go for $1,900 for military. Right?
Yeah.
So it's like generally there's been like a $700-800 spread between Section 8 and military rental, and in between that spread, in between that $800 spread, is the middle.
Right.
The middle, like the people who don't qualify for Section 8 and
mm-hmm.
the people who don't qualify or who are not service members, obviously, right? And over time, you've seen more people position their units to chase the higher rent.
Yep.
And then that left this market behind, and then forced these guys in the middle to go below kind of par to take some of the units that are just a little bit more affordable. They'll put some of sweat equity in it. They'll make nice deals with the owners, that kind of thing, and they'll just look for longevity, right? But now Section 8 rents are significantly increased because of that competition, because you have a real problem, right? Because they can't find units and no one wants to work with them, so we throw money at the problem.
Right.
So now 2025, market rents and military rents are par, essentially.
Yeah, I would say, so Section 8 rents are at par with military.
Yes.
But that middle group that you're talking about, they're the ones that are getting priced out.
Exactly. So now we're par, and there was this gap in between, and there is no gap in between.
There's no gap between Section 8 and military. They're at par. Section 8 in some instances might be a little bit higher.
Mm-hmm.
So all the property owners, they're going to chase after those two.
Yes.
Because just from a return standpoint, those are the highest returns now.
Mm-hmm.
And that middle segment, the local market, they're completely priced out.
Yes.
So what we're seeing right now is everybody's building to address, not address, but they're chasing their return on investment.
Mm-hmm.
So they're chasing the low income, they're chasing the Section 8, they're chasing the affordable, and they're going to chase the military. But all that does is just completely price out the private sector.
Right.
And, I've had friends who've moved off island because they can't afford to live here anymore, right? So, and that might be a trend going forward too.
Yeah, and let's talk about the chase, right?
Mm-hmm.
Let's talk about chasing because, again, Section 8 rents have been here,
Mm-hmm.
right? Military rents have been here, but we still have an inventory shortage, and that's because no one's willing to put inventory on the market at the rate that's being presently offered,
Mm-hmm.
right? And you say, well, that's 2,500, that's 3,500, those are amazing numbers. Right? That's not if you have to build it.
No.
Not if you have to build it from now. That's if you have existing inventory. And I would argue that anything purchased now that's new construction, you're not cash flowing positive if you're financed, right? It's
Especially with interest rates.
Correct.
Yeah.
So no one's cash flowing positive. So now you have this influx of 1,400 units that are going to be brought to the market, and now these developers are going to develop.
Yep.
Right. But what do you think their numbers are going to look like? What do you think where does the logic behind the pricing for the developer come?
I believe that goes back to the original RFI.
Okay.
Because in the original RFI, they were trying to find quote unquote creative ways to build these units quick.
Okay.
And quick means a different construction strategy than rebar, reinforced concrete block, concrete roofs, right? So you have to find ways to build things faster with different materials.
Okay.
And that's where they might get the savings. They're also going to get economies of scale savings. They're probably going to loop it in with other projects and then just buy all this stuff in bulk, and they can build it cheaper than your smaller guy, right?
Well, so let's just hammer home that point right there, though, right? The point is, part of the deal is the exit.
Yeah.
Right. It's the idea that if I did use Paradise Estates as an example, right? That's 4 phases.
Yep.
But if they put all 4 phases on the market at once, the market wouldn't have been able to absorb that inventory. It would have bankrupted the developer because you have a fully realized and amortized subdivision,
right?
Gaining interest that you can't get out. But now what the military is effectively saying is, if you bring it, I'll buy it, right? Lease it. I'll make sure that you have a landing spot.
Yep.
So that's what's pushing, right? At the same time, on the affordable housing side, or attainable, I should say, right? We corrected ourselves here. But on the attainable housing side, the same situation, right? I have a captive. I know I have at least 10,000 people, right, who need to fill. Look, we talked about the gap, right? And now, so this inventory is coming on the market, right?
And the whole light tech structure is completely different. It makes it, Guam is one of the few markets where light tech makes sense.
Okay.
Because you get all these bonuses for location, high land value costs, high utility costs. They give you extra bonuses for those light tech structures. But again, that's only a handful of people who really understand how to do that. And that's why even from a construction standpoint, it makes sense, right? Because that stuff is profitable from day one.
Right. And the developer is heavily subsidized, right? For meeting these benchmarks and meeting these community needs. Right? And it seems to me that's the conversation we've exactly been having, right?
Yeah.
The the market will move, the exit will be there,
Mm-hmm.
but we need to find creative ways to make that happen.
Right.
And it's interesting that you said speed and cost, right? Because modular is heavily in this discussion,
Right.
right? Because from what I'm hearing, no one can afford to bring inventory to the market between $2,500 to $3,500 a month, right?
Mm-hmm.
That's not a viable option for anyone unless you're using a modular solution or steel
Right.
or something
Right.
that's not traditional to the market, right? And so in that, you have these people who now need to decide if they're going to take a risk on a 20-year solution that's going to require massive capitalization, and how am I going to unload it to a market that historically has hated anything other than concrete,
Right.
right? I mean, you have your outliers, right? You have Lockwood, you have Ravda,
Mm-hmm.
you have Gigacrete, circulating, and you have Thermosteel,
Mm-hmm.
right? Who I'm hearing won a bid, with for a design build behind the fence.
Okay.
That's being vetted now. So there is a steel solution I hear that's being looked at, and that's probably because too they realize that, man, we got to figure it out.
Yeah. Yeah. So like if those guys, if those alternative methods, especially if thermostat, if they get a contract behind events, then they're going to be able to build stuff outside.
Right. And then we talk
at speed and cost savings, right? So,
and then we talk about steel structures. Steel structures are prolific in the market. You just don't realize it. Most commercial buildings, the hotels, high rises, they're all steel, right? Same material. A lot of the condos as well, right? Well, I shouldn't say a lot, but a subset of the condos are, right? And so that comes into consideration too, because when we get into the residential matrix, right? For residential, for maintenance, for getting residential conforming loans for these, you need to have hazard insurance, right?
Yeah.
Maintaining hazard insurance in this market for steel structures is very expensive, right? So they say whatever you save in labor and materials, you're going to end up giving back in insurance premiums, right? Because of the risk of the market.
Right.
And that's a real thing too, because everywhere in the world is having these huge losses, and getting risk underwritten is very hard now, and reinsured is extremely hard as well, even in the regional markets that we play in.
Right. Yeah. And no, that's a really valid point, because alternative construction outside of concrete, the insurance cost is high.
Mm-hmm.
And because a lot of insurance carriers don't want to take that risk.
Right.
And it's going to be a similar situation like when the California fires happened. They're not insuring for fire. There's a lot of places that are like, no, we're not going to insure for fire. And I think even for the Palisades, a lot of those homes weren't covered under fire insurance because there's just none.
Mm-hmm.
Because they knew that if something happens, this is a catastrophic loss for them. So they stopped offering that package, right? And I'm sure the same thing is in Florida. Florida has a similar situation because of the hurricanes. And I think, I don't know if there's enough raw information to say that these structures will not survive a major typhoon if it hit Guam.
No,
it's still unknown, right? The only one that I heard of was they did some kind of Gigacrete construction in Saipan, but then the ones that got damaged were poorly put together. It wasn't so much that the design or the technology was bad, but when they put it together, they didn't put it together well.
Sure, and it's inevitably not the idea that it's bad, right?
Mm-hmm.
Lockwood, Ravda, Gigacrete, those are all viable solutions, but sometimes it's the lack of expertise in the person selling the solution in the market, right? And that's where you get all those, those side issues that are, but really it's like the products of, even precast has, if you talk to anyone about precast, they'll talk about leakage from the joints, right? Mm-hmm. But then you talk to precast producers because the guy who put it together didn't know how to link it up, right?
Exactly.
So yeah, there's a lot of nuance to the discussion, but but circling back to the point about the hazard insurance, right? Mm-hmm. That's what captive insurance is for as well, right? To make it to make risk more attractive to reinsure.
Mm-hmm.
So we see we see these conversations, and whenever we run into like an obstacle, it's you have the economics don't work.
Right.
And if the economics don't work and we need to provide a solution, then we have to find a way to make them work.
Yep.
And so we've come up with a couple solutions right here, easier said than done.
Yeah, of course.
But just to highlight the problem.
Yeah.
Right? It's not like, I've heard captive insurance bandied about here for a long time. I hear there's going to be the CBDG coming out, the Community Block Development Grant. Right? That's out and that's active. GURA has about $200 million to spend on infrastructure, right? That's going to be addressed. The hospital is going to be built, maybe, right? Maybe. But 1,400 houses, hospital, massive military buildup, CBDG. What does that do to the inputs? Then do you think we're going to have a problem with like aggregate and like concrete and all that stuff? Or is it just like, we have 6 billion in capacity? How are we going to get it off the port?
That's the that's the big question.
Imagine 1,400 steel houses being delivered to the port. There'd be like a line out to Saitesh. How would you move it?
Yeah, the port infrastructure, I don't know if it's, the Gulf Pier is still down.
Oh, really? Okay.
So that means Cementon's facility still cannot offload.
Oh, wow. Up to now,
I think the only offload is Hanson.
Okay.
So then everything has to be routed through them, right? Our fuel piers are, I think, like, we don't have enough redundancy. If something happens, then we're in trouble, including fuel. So our infrastructure is like, we're in dire straits, right? It's bad, especially with the amount of the people that are going to just come in here, just from the military side, right? And yeah, it's going to be challenging. It's not, everything looks good and promising, but there's a lot of stuff that are hurdles still, that are unknowns. And you brought up that supply chain is a big thing. Like, how do we get it here? How do we get it off?
Well, even on the power side, right?
Power side is a issue too. It's like, like we were talking about, do these properties have power to the sites already? Or do they have to completely put utilities in? Do they have to put, because they can't go, they can't get away with like the 2-inch water lines, right? They're going to have to put in 12-inch water lines if they're going to build these kinds of elements, sewer lines and other things. And it's that in and of itself, how long is that going to take?
Okay.
Right?
Yeah.
How long will it take to get the infrastructure in?
But it's interesting because you have a major asset floating too, right? You have the Westin, right? It's 125 million, but I don't think they would buy a hotel, like an active hotel, right? I think they would look at other like properties that maybe want to be offloaded, or like an abandoned hotel or something, like that, right? So like Sherwood or Paxstar, or maybe PHR wants to drop one of these. Hey, I think this one. But yeah, I don't think they want to subtract inventory from that, right? So they want to pick something that's kind of dilapidated and needs to be brought, right? But I also think everyone who has an NOA, notice of action, that has been approved in the last like 5 years, either they've put in a solution if it has more than 50 units, or someone has called them and asked them to lump in with their solution, because that's the only way you're going to go. It has to be something that's really approved for the 2028. And even for the 2028, even if you're approved, you're still negotiating with civil, right? You're still working with EPA, because that's going to be your roadblock. It's not your permitting or your design plan. From my conversations around it, everything stops with EPA. And EPA doesn't move for Department of Defense. They don't move for GURA. They don't move for Yo Mama. They don't move for NOVA.
That's just the reality of the situation. You look at a 3-year timeline. It's probably 3 years if everything is approved.
No, but you know what's crazy? Because like from what I understand on these defense contracts, the penalties for missing your deadline are so significant, they'd rather risk the EPA fine from moving ahead. Well, not now because there's no cap, right? But before, when you knew there was a limit, man, my penalty's way worse than what I'm going to get in this fine. I'm just going to build and say sorry. And that's kind of the Guam thing, apologize. Don't ask for permission, apologize. Say I'm sorry.
But you can tell how old our infrastructure is too with the recent landslide too, right? And most people are they're doing their investigation, but they're speculating that it's a faulty sewer line that was old. Right? Well, the old Navy sewer line that was there.
Yeah, and it happened before.
Yeah, so it's like, and this is the infrastructure that we're working with, and I think you need to upgrade that stuff.
That's crazy though, because that one, they dropped the sewage down to the lift station and then it pumps it back up, right? It's like whoa,
it's crazy. But yeah, so it's there's still a lot of hurdles. There's a lot of things to overcome.
Yeah.
But like I said, we're just addressing these two segments where the returns are higher. All right.
But now, but we're getting to this place where the only people that can afford to live here are people that are modeled in these programs.
Right.
Or if you're subsidized, whether because of your income level or because of your service to the government.
Mm-hmm.
Right. And you're seeing that expounded out to even schooling.
Mm-hmm.
Right. You know, even like the contractors that come here, they're impacting the school, but they're getting a voucher for schooling that they're using.
Mm-hmm.
Right. And that's competitive and it's crowding out the private schools now. Right. So the middle income people are really completely getting slammed here.
Yeah.
Top and bottom. Right. And just really squeezed out. And I'm our last guest was Carlos, and I'm grateful he's bringing solutions to the market. But LIHTCs are dependent on the bond market. If the bond market shifts, then the LIHTC isn't as attractive to investors and the yields go down.
Yep.
And then there's nothing happening. And we saw that after the Asian economic crisis, right? The LIHTC market effectively died for a few years. Right. And then that could turn off at any time. They just put it all in the States, right? And they doge all that stuff, right?
But I think even with Section 8, that's a false sense of security almost, right? Because they can come at any time and say, hey, we want to readjust. We need valuations done and see what the market rent is for Europe.
So I'm glad you talked about that, because that's exactly where I wanted to go next, right? Mm-hmm. Because what if the rug gets pulled out, right? So you have these 1,400 units. Now you have this surge in housing going on behind the fence that these 1,400 units are modeled to manage, right? We're probably looking at like 20-year leases, right? The government preferred lease like 20, 30 years, right? Some guys are going to look for 50. Unlikely the outright purchases are going to be owned by the government. They're just going to get picked up by like a Hunt or Corvallis or Lend-Lease or something like that, right? And then managed outright like that. But, okay, so now I have all these units. My lease is coming out, but now we've shifted because at the chamber meeting, right? You brought up the chamber meeting. Yeah. They talked about, one of the question was asked, are you going to shift from OHA to BAH, right? Yeah. So let me differentiate here, right? OHA, Overseas Housing Allowance, is use it or lose it, right? Mm-hmm. So use it or lose it means the service member just being in the market generally doesn't care. If it's $2,200, he's going to give you $2,200. He's not going to negotiate, right? Bachelor allowance or basic allowance for housing, right? Basic allowance for housing allows you to keep the difference. So the idea is if the member goes out and negotiates down to 17, he gets to keep the $500 difference and pocket it, right? And that's a very sensitive discussion to the market, because we were talking earlier and you were saying, well, some markets won't hold that out, like Los Angeles, New York, right? The markets the demand is going to be so significant that it's going to push prices up no matter what. Mm-hmm. So let's say so let's talk about short-term and long-term, right? So short-term, what do you see happening with that? And long-term, what do you think happens if the government I saw the guy smirk. I saw the admiral get a little, like, because there have to have been conversations around this for sure, right? Because everybody recognizes the bubble. It's so plain to see.
For decades, I think they've been having this conversation.
Sure. And it's a very, it's a hotbed, right? It's a very tenuous discussion, because, it affects like property owners or voters who have influence, mm-hmm. right? And it affects like many segments of the market.
Sure.
So if they do, and I think they will, me personally, right? They'll shift it from OHA to BAH once this inventory is produced, mm-hmm. right?
Yeah.
Then it's like, We have lots of inventory available for you behind the fence, outside the fence.
Right.
There's a variability of options. But now if you don't like any of those, well, use it or lose it, right? Or not use it or lose it, but you negotiate out in the open market. Right. Now with that declining housing pressure, Section 8 says, oh, we don't have to have it right down here. We'll cut that out or, funding, whatever. Okay, so where do we go? What happens?
I think short term, regardless, there's going to be a housing shortage. So I don't know if there's going to necessarily be a big shift in the short term, because when the inventory is limited, whether you're on BHA or OHA, the landlords have the stronger position, right? It's like, okay, you take the 22. If you can't, go look for somebody else. But everybody's just going to be saying 22, no matter which door they go knocking on.
Sure.
Right? Nobody's going to drop it because they know that the inventory and supply is so limited and the demand is still going to be high. It's just when we reach that tipping point where that balances, right? When you reach a balance of supply and demand, and that's when the market's going to start shifting. I think that's when the rental rates are going to start going down, because now the property owners are going to, okay, let me be the first one to drop it $100, right? I'd rather have 2,100 instead of vacant for 6 months.
Yep.
Right? And the next guy's going to be, I'd rather have 2,000 than be vacant for 6 months. So it's going to slowly, eventually start coming down where it equalizes. But how long that takes, who knows? It's just going to be dependent on how much inventory we can bring onto the market, including what they want to build, right? It's just what they're going to build inside and how much is going to get built outside. And if there's enough supply on the outside, then it's going to start shifting everything down slowly. And in theory, right? In theory, the people that might lose out are the property owners, but that's kind of part of the risk you take, right? As if you're going to own real estate, investment, you make a lot when it's good for you, and then you kind of, do we want to stick it out, or do we need to reposition, sell, and for different opportunities, right?
No, it's absolutely a long time horizon, right?
Yeah, but that equilibrium point is going to take some time, right?
Yeah,
because it's going to be once the rates start coming down, what has to happen first is the guys coming out of the fence who have BHA, they're going to double up, right? They're going to still pay the landlords are still going to get the 22 when the supply is short, but they're just going to have two unaccompanied living in a house. But the landlord's still going to get 22. But eventually there's going to be a point where if the supply is big enough, they don't need to double up.
Sure.
Right? People are going to start coming out. I'll just take a place on my own, or they'll go into an apartment building that's cheaper, and it'll just slowly start readjusting all the rents all the way across.
But then, so what we talked about is the middle income getting squeezed out, right? So, and you're talking about how a lot of your friends are leaving Island, right? So over time, we're not getting any young kids here, right? Because they're leaving because it's too expensive to live here. The middle class is leaving, right? So 10 years down the road, 20 years down the road, when this inventory comes available, who's going to buy it?
Yeah,
and these prices are starting to cascade down, right? Because like you said, that market effect is happening.
Yeah.
Right? Now we've lost the middle class, we've lost our young people. All we have here are subsidized tenants who are upwardly mobile, right? There's programs in place, but not at the rate at the middle class is. Fernando Estevez was in here, and he said, who do you think you could to activate to most heavily activate the real estate market? He said the middle class, right? That's really what it is, because it's like if I just get like an extra $400 a month, my opportunities for wealth building go up significantly, right? And I have the capacity and I have the infrastructure for it. But when that leaves, that's what happens.
Yeah, it's even more complicated than that, because I think the one factor that's going to remain the same, regardless of what happens with all this stuff, is how much does it cost to build something?
Yep.
That's the one component that's never going to change. Right? So if we start seeing a trickle down in rents, there's just going to be a point where people aren't going to build.
Yeah.
Right? Because like we were talking, the economies don't make sense, right? It's not financially feasible to build this to sell or build this to rent, right? So nobody's going to build, and that supply constraint is going to remain, and that's going to continue to keep prices high, right? That can be the alternative, right? It's not just going to be a simple, okay, once this starts happening, it's going to be a slow trickle down, lower in terms of rents and property values. If it's not financially feasible to build, nobody's going to build.
Okay.
Right? Nobody's going to be that dumb to like, okay, this is my charity. let me build a $500,000 house and sell it for like 300.
Well, no, I get it, right? But then even at that, right, there may not be enough people to absorb the inventory that already exists, right? So then you have vacants, you have dilapidated, right? Then you have diminished communities, all those things, right? And that's the point. Then at some point, the market will get low enough where, like, oh, come buy this house on Guam. It's $1 or something like that, right? And get people to try and come back here. But hopefully we don't ever get there.
But I mean, Carlos mentioned it too, right? When he was talking about the Jones Act and the impacts of that. I think those are bigger overarching things that affect our market, because unless we can bring down the cost, the pricing on sales and rentals won't really change.
Got it.
And no matter how much of military demand there's just going to be a point where there's going to be enough inventory to keep prices high. Right. And there's other places like Hawaii is like that. They're not on BHA, they're on OA, but it's just so expensive to build. The people that are buying are like foreign investors.
Yes.
Right.
Yeah.
And the OA rents keep going up there. Right?
Yeah, they sure do. Well, billionaires are buying there too and all this.
Yeah. So it's like the cost is so high, and I think that's what might eventually happen with us. I would think that's more realistic unless there's a way to figure out the cost component.
Well, and then we've talked about the ways, right? Like favorable financing structures, like guaranteed exits or, making sure the developer doesn't have to carry through time, right? Because the developer needs to make money. The economics have to make sense to take the risk, because it's fraught with risk. Even working with some of these groups to put these proposals together, you can see the inherent risk in promising something and then having to deliver it along those parameters over a time where there's so many shifts in inputs and outputs, in manpower, in productivity. It's a tornado. You can't anticipate anything.
Right.
So it is fraught with risk. So there has to be a bag of money at the end of the rainbow, I guess.
You would hope so, right? And then that's going to be the issue with a lot of these guys that are bidding too, because I think from my recollection, even when Black Construction bid out for the glass breakwater project, their initial proposal was much lower, but the proposal took time. So by the time it got finally approved, it was way higher than what they originally projected.
Right.
Because it's a daily thing, like month after month, these costs are going up, labor costs are going up. And it's so hard to, even with that, what you're talking about, incentivizing and having these programs to make it profitable, that's such a moving target that I don't know if anybody can really, you have to be really good to manage that stuff, right? You have to be on top of everything to make sure that you understand how much costs are going up, how much concrete is going up, how much steel is going up, how much the labor market is going up. And it's like, okay, I have a 3-year project. How is that trend line going to look? Because I can't order everything now. I have to order everything in phases.
Sure.
Right? So, and we're not on a timeline trend where costs are going down or these things are going down. Everything is going up. So it's, who knows what that bullet of money at the end of the rainbow looks like.
Right.
It might be a lot less when you're originally thinking, right?
Really, it really can be.
Yeah.
Right? And also, no one has ever seen what happens when all this hits Guam at once, right? We talk about like all these construction projects, all this mobilization of materials coming from the port,
right?
Some of the structural issues that prevent things from coming in. So there's no way to, it's like you don't know what you don't know until you get in it.
Right. I wouldn't be surprised if the Navy will open up their piers for offloading too.
Interesting. Okay.
That might be an option too. It's they're probably going to be a little bit hesitant, but if it's for the buildup, on occasions, they might allow certain things to help offload that stuff. They're not going to be a primary, like, okay, we're open and you can just do it. There might be instances where they're like, okay, we'll make accommodations for this. We'll make accommodations for that. So there's going to, logistically, there will be ways around it.
Okay.
That are going to pop up.
So, what would you do if you were a developer right now? How would you position yourself?
Jeez, I would probably do the same thing that these guys are doing. If I had a large enough contracting company, if I was one of the bigger players, right? Yeah, I probably already have large tracts of land somewhere, right? But the main thing would be for me to try to negotiate for the military to put in the infrastructure.
But then when you look at who the players are, right? The guys that are going to be the best positioned to do this are the guys who have all the verticals. They have the supply vertical. They can monetize that. They're the developer, so they can monetize that. They're the contractor, so they can monetize that. They're the financiers, so they can monetize that. So if you have those economies built into your model, like say Cortec or something like that, or you have an existing asset like say Leo Palace or Pacific Star where you can offer up, then those economics kind of make sense for you.
For sure.
Then you can be really aggressive in your deliverables. And then the spreads are considerable. But for everybody else, we have to outsource it and we have to deal with the economics for everybody else.
So I think you hit it on the head. It's like there's only going to be a handful of people who can really do this.
Yeah.
And the rest, the smaller guys most likely can benefit by being subs. But outside of that, I don't know if you can be a small guy and try to tackle on some of these telecom, right? And they were even saying early on, when you're bidding, don't bid as individuals if you're like medium-sized. Partner with a group of contractors who specialize in different things,
right?
And then submit one bid, as if you're one entity.
But JV, you get a different modality,
some kind of joint venture project, and then that's going to be better suited, right? Because then they're going to have on the military side, you're going to be more comfortable that you can meet the timings, right? Because you have specialists doing certain things, and everybody's going to have specific tasks, right? So you don't have to be a Cortec, but you just need to find the right people to JV and try to take this.
That's fair.
Right.
There is a significant amount of capacity, but you just need to team up, right? So we need those teaming agreements and the syndication. That's really good. That's insightful. That's really cool. Thanks, Sang. I really appreciate the discussion around all this. It's super cool. Is there anything in the market that's weird to you that you saw? Any market observations or anything that kind of made you say,
Like we're talking about stuff that's good that's going on in the market, right? That's going to be positive for certain industries. I think the industrial market is another segment that's strong, because there's just limited supply of warehouses, and we're just going to need more as this buildup continues. More contractors, more people that are involved with these projects. They're going to need warehouse. They're going to need office, right? The unknown dark spot still is tourism.
Yeah, is there a third leg still?
It's hard to say. Like you're talking, right? Pacific Star is down. The Verona is down. Is what's the one across from Pacific Star? The Royal Orchid is down. Like all their a lot of their retailers left already, right? And we have 3 hotels that are not operating, and it's not really affecting our occupancy down there, right? I know some hotels are still at like 50%. If you're doing well, you might be at like 70, but that's just a handful, right? Just you pick and choose. You probably can figure out which are the ones that at 70, but the rest are probably down at 50.
No, I think there's serious discussions being had probably about converting some of that for UH.
Yeah, and you were mentioning like they probably wouldn't want to touch that, right? But with all the hotels that are non-operational right now, you
got to look at it. Yeah.
You have to look at it because our tourism is, it's struggling, and who knows when that's going to come back. And It's really sensitive, right? Because it's like, okay, if we start converting these hotels to military housing, what does 2 months start looking like, right?
Yeah, fair.
Is it going to be an attractive market for foreigners to come visit? Or is it going to be more of a deterrent, right? So it's like, man, it's good for the military. Is it good for our tourism? Is it good locally? There's so many socioeconomic stuff that comes into play with a lot of these things that it's just an unknown.
Yeah.
We're just not going to have an idea. And the tourism numbers just don't look good right now. Turning that around, it's going to be a priority, but the real question is how quickly or can we, right?
Yeah, I mean, you can throw all the money you want. You can make an impact, but is that sustainable over time?
Yeah.
Just looking at the landscape, it's hard to say yes and really like believe it.
Yeah.
But still, it's always been there. So
but that's why I'm an appraiser, because I'm risk averse. The people that make all the money are the ones that are like, oh yeah, this is a gold mine opportunity, right? Or when I'm scratching my head, it's like, I don't see it.
Well, for every guy lighting the fire, there's someone pouring water on it. But sometimes we need some of that, just to couch expectations. But no, I appreciate you saying it's always really interesting, and I'd love to have you back, soon. Just keep talking about the real estate market.
Sure, anytime.
All right, thank you. That was a really nuanced conversation about everything that's cascading as a function of this RFP and what the effects are going to be. And it's massive. It's really something that's never happened here before, and it's really something that's going to shift the real estate market. People are having these huge conversations around inputs and investment and the movement of capital and the ability to execute what's going to be a massive and monumental effort for, this isn't backed by the U.S. government per se. This is a private developer promising to deliver units, and that is fraught with risk for all the reasons that we talked about. And that could ruin some people. And it could also be a life changer. So it's almost like lottery tickets are being sold, and, buy them at your own risk, because they can ruin you or they can make you in perpetuity. So I appreciate you tuning in to hear this discussion about the RFP. And we're going to continue to have discussions around everything in real estate here on Data Points. We look forward to you tuning in, subscribing, liking, sharing any of our platforms. We're on Instagram, Facebook, YouTube, and Apple Podcasts and Spotify. We'll see you soon.